The watch list this week looks quite bare. We've got gold, NASDAQ, Australian dollar Swiss, Euro Swiss, and the Euro Pound. And the reason is, of course, you should all know we do have FOMC coming on Wednesday, which will announce the Fed rate cuts, whether it will be 25 or 50. Or they could throw us a curveball and not cut rates at all. However, I don't see that as likely at all. So as for news this week, we do have a very busy red folder news. We've got CPI for the Canadian dollar. We have got retail sales for the US dollar. We've got CPI for the Great British Pound or the sterling. Employment change for the Australian dollar. Unemployment rate. Monetary policy for the pound. So we've got a very, very busy week coming. So I'm not looking to get too active in the markets. We do already have some positions on. These were sent to Discord. So we're in the US dollar, Canadian dollar shorts, and these are hedges for the euro dollar short position that we're in, obviously going both ways into the dollar for FOMC. We are also in coffee and I'm in wheat as well. So that's it for active positions. So yeah, as I said, looking to play it a little bit lighter this week, but there are still things on the watch list, of course. Main thing really is gold. So gold saw all-time highs get absolutely blown through, and for anyone that's watched my content frequently, you will know that I was in gold long here. I was way too aggressive trailing stops, so I was stopped out on these candles right here, down at 24.82, and now we're all back up at new all-time highs. So I'm a little bit salty about that, but you know, what can you do? You can't do anything about that. It was just risk management that I played a bit too safely, which in trading normally isn't a bad thing. So what I'm looking for in gold is something along these lines. I'm looking for exactly the same setup we had down here. So we broke out of these all-time highs, this resistance, created new all-time high, retested this previous level, and then shot to the upside. So I'm looking for a very similar move. So I'm looking for the pull to the downside into this level, break and retest, and then a continuation to the upside. So for gold, we do have quite a few things playing in factor for gold's bullishness. So we've got the Federal Reserve's easing cycle, we've got inflation concerns and currency debasement, we've got global economic uncertainty and central bank demand. I won't read all this out, but I've put a screenshot on the screen so you can read it, and pause and read it if you want to do that. Moving on, we do have NASDAQ. Now, there is a slight concern with a lot of the indices. I've been reading a lot of the bank reports, as always, and it seems like they are viewed as very overpriced, especially the S&P. However, I'm not yet looking to short. I've not seen enough signs. So at the moment we are seeing, we had an all-time high here. We had a lower high formed right here. However, I have also seen arguments for NASDAQ to the upside. And my personal rule is I don't go in for short positions on the indices unless we are having a black swan event or there's some really compelling information to go short, which I haven't seen in this situation. So essentially looking for some sort of pullback on the NASDAQ. To where? I'm not too bothered really. I'm happy to just buy the next dip we have, or the next pullback we have, whether it's down to, the fib from low to high. We come back down 50% of this move into this fib level and we buy from there. Or we may even come lower and retest this 200 daily moving average. Either way, I'll be looking to get long. If I'm stopped out, then fine, no problems. We risk small here, we win big. That's the way it works. So yeah, happy to do that. As you can see, the 200 moving average is still sweeping price really nicely. You can see down here in October 2023, so almost a year ago actually, we came down again recently and rejected, and we just almost rejected again quite swiftly after the previous one. So to me, this is quite a nice sign that the trend and the momentum of this market remains bullish. So happy to buy and see how this goes. Now, the Australian dollar Swiss is probably my favorite setup this week. So again, there's a print screen on the screen, so feel free to pause it and read the exact details. But we've got divergent central bank policies, we've got China's economic concerns, global risk aversion, potential overvalue of the Swiss, and the A1 Edge Finder is also reading this as bearish. So you can see the seasonality is typically bearish over the past 10 years. Retail is primarily long. COT data is not doing too much, so relatively flat. GDP, manufacturing, PMI, retail sales, all bearish for this asset. So it looks very, very convincing to go to the short side. So if we look on the daily time frame, we have sort of two take profit levels. We've got a relatively short term level here where price just bounced off this past week that we had, and then we have the extended take profit down here at this these sort of weekly lows down here, and this is what I'm targeting. So what I'll look to do is maybe just not have a take profit here, because if we can break past this low down here at 0.53, there is no reason we couldn't potentially come even lower down to the fib extension at negative 0.618. So maybe no take profit. However, the first and second take profits are obviously these orange lines that we've got marked up as the previous levels of support. And I may be trailing stops or even taking partials at these levels. However, looks very, very strong. You can see fib from low to high, from high to the low. We've got this level where the 0.618 and the 0.5 are sort of intersecting. So this golden zone, as we call it, is being respected very, very well. And we are seeing some movements to the downside now, potentially a lower high getting formed right where we are. So I will be monitoring this one. If we can see a little pull to the upside or a continuation to the downside, doesn't matter too much. I will be looking to get short this week. This also comes into play with the safe haven factor of the Swiss. So if the markets get shaken up by a 50 basis point cut, we could see slight allocation to the safe havens, such as the yen and Swiss. Which obviously, if we see buying of the Swiss, it would help this market as we see the Australian dollar continue to lose value against the Swiss. Very, very similar situation here on Euro Swiss. I've actually not done any analysis on this one because it's very similar to the Australian dollar Swiss, so I won't be taking both of these trades. More than likely will just take Australian dollar Swiss. However, if I can't find an entry on that one, I will then resort to the Euro Swiss. So this one relies on basically the same thing. We've got very weak data coming out for the euro. So we've got ECB dovishness and S&B strong stance. We've got safe haven demand for the Swiss, Eurozone economic weakness, and S&B tolerance for Swiss strength. So just a quick pause here. If you guys are interested in where I'm getting all this information, it's all in our Discord. I put it together every day. I update our documents on the Elite Traders website, but private to members only. So you can join our Discord and you'll get access to updated information every day from banks and from our personal perspectives at Elite Traders. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education, with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So the price action on Euro Swiss looks very, very similar to Australian dollar Swiss. So the setup won't deviate too much. We'll be looking for fib, low to high, looking for potentially a slightly higher move to meet this 200 moving average, along with the 0.5 level, which is the 50% pullback, and then looking to potentially just get short here. Something along these lines, and then ride it to the downside. There isn't any huge daily or weekly levels here like there is on the Australian dollar. However, there is one line here that we can pay attention to right down here at the 0.833, and this was actually passed from 2015. So if we could get that level, that would be a huge trade. Now, I'm not sure if we will, because as you can see on the screenshot that I popped up, although there are concerns about the Swiss being overvalued, the S&P is likely to tolerate this in the short term. So the short term is key there. So whether we can get down to, the 0.833 level before the Swiss starts losing value again or starts stabilizing, I doubt it, but it is something we can keep in mind. And maybe, if the price action and momentum and of course the economics support it, then we could start extending our take profits down to there and trying to see if we can retest and create a double bottom. Now, the euro pound is one I've been very, very upset about recently. And the reason is because I was very short in this market at the wrong time. So I was short here. Let me just amend that here. So I was short. I got stopped out by this big green sort of rejection wick that you can see. And then after that wick, things actually started to seem a little bit bullish, or my bias flipped a little bit bullish. So I was sat out because obviously I didn't want to buy into this weekly 200 moving average. So I was sat out. And then since then, we've melted to the downside. So I got chopped up. It is what it is. Unfortunately, I can't change that. However, I'm now bearish again. Now, it might be a little late, but we'll see if we can get some sort of pullback here. The economics support this, so we've got divergent economic outlooks, we've got ECB dovish stance, we've got the Bank of England policy, we've got political stability in the UK, potential risk aversion. Now, if we draw again the fib from high to low, we've got this 50% level that meets in with this previous level of structure really nicely, and we have broken down past this. So I'd be looking for a similar thing that we saw in gold. So I'd be looking for the retest of this level and then a push to the downside. So it would look something very similar to this. So stop potentially at this previous high up at 0.85 and then a take profit potentially down at this fib extension just to make this a 1 to 2 risk to reward minimum, because if we go to just previous lows it would be a 1 to 1 roughly, and now that's okay. I don't mind taking 1 to 1s, but obviously I would rather take a 1 to 2 if I can. So I'll be monitoring, and maybe at this level, these previous lows, I'll be moving stops to break even and assessing how the market works. But of course, Discord members will be updated and we will manage this together. So the last market I'll cover is euro dollar. So we're already in euro dollar. So we're in a couple of positions here. Of course, there is a signal out for Discord members and account management's been taken, and I've got it on my personal accounts as well. So euro dollar, people are very bullish. Retail seems to be very bullish. If you go on Twitter, people are trying to buy euro dollar. There's a lot of talk of buying, and I'm short. Now I've already made a video previously about shorting euro dollar, and people in the comments weren't happy. They, essentially we're saying I'm wrong, and look at where we are now. So I think it was last week actually, Credit Agricole sent out their position saying that they're short on euro dollar, so you can see their levels through here, and that was sort of one of my confluences to actually execute on this short and say, okay, I'm actually going to click the sell button now. So we did see a slightly higher price. So in my personal account, I'm actually in on this wick here from NFP. So the reasons, you can see we've got ECB dovish stance, Eurozone growth outlook, weak Eurozone growth outlook, we've got Federal Reserve policy and global risk factors. So very similar to the previous analysis, but yeah, very simple trade. There's nothing crazy here, just looking to get into potentially some more shorts. I would like to see some slight move to the upside here as we start getting close to FOMC, and then I can get into one final position and scale in before we potentially see that drop that I've been waiting for. We do also have very bearish seasonality for euro dollar coming to play now from the 12th of September until the end of September. So I'm looking to play off quite a few factors here, where it's the economics, the seasonality, and the price action. We can see we've got, the high, we've created a lower high, and now potentially creating this third lower high off this trend line that we are seeing. So technically and economically and historically, this trade looks very, very good. So yeah, looking to keep in that trade. Now, the US dollar CAD, if you're not in this position, I wouldn't be executing short. I am actually quite bullish on the dollar CAD. However, as I said, this is a hedge for euro dollar. So if FOMC comes out, and it shakes up the markets and we get stopped out of euro dollar, then the dollar CAD will in theory start heading to the downside and will offset that risk. Now, there is another factor, and this is a little sort of tip, and I put it in the Discord. Now, I'm not going to go into this deeply because I think it's a completely separate topic and I might make a video on this specifically, but it's about portfolio management. So essentially what I said in the Discord is, if we are short the dollar CAD and we are long euro dollar, we've offset our risk for the US dollar because we are trading it both ways. However, we do still have the CAD. Now, I'm not bothered about the euro because I'm very bearish on the euro, so I'm happy to sit in a negative position there, or a short position, I should say. However, the dollar CAD, the CAD specifically, I also want to offset my risk there. So how do I do this? So I've offset risk on the US dollar, but now I want to also flatten the risk on the Canadian dollar. Well, what we can do is look for oil. Now, this is another thing on my watch list actually that I forgot to cover. So this works out quite well. So you can see here, I need to add this to watch list. So you can see here, we've got this really nice high to low fib. This 50% level meets this level of structure. We also do have quite a clear downtrend here, along with the market drivers for oil are pretty bearish at the moment. Essentially, if we are shorting the dollar and long the dollar, thus putting us long on the Canadian dollar, we need to then short the oil markets because the Canadian dollar is driven heavily by oil. So if we're looking for the Canadian dollar to go up and we want oil to go down, that essentially negates our risk on the Canadian dollar. So if we can get into an oil short position, we're now flat risk on the US dollar, flat risk on the Canadian dollar, and we just remain short on on the euro. So this trade looks very good, and I think that this is going to be the play. This probably is one of the main plays actually for me this week, if we can get slightly higher push for this break and retest pattern to form. So guys, that's it. Please like and subscribe if you like these videos. I try to go into a bit more detail and make this video a bit more clear than the previous one, so hope that worked out. So yeah, I'll make some more videos this week, and I may cover the portfolio management and the hedging aspect of things in a separate video if you guys are interested. So let me know in the comments, and I will see you later. Thank you for watching.